dear aspirants, welcome back to Goldfinch and Case Institutes, and today I'm going to discuss one more important topic, that is Monetary Policy Committee. I'll tell you why I'm discussing this particular topic because in today's Hindu newspaper in the business page, this particular news came into news. That is, Monetary Policy Committee holds the rates, that is the interest rates, and expecting it is going to ease the inflation to 4.5% and the growth is projected around 7%. This is not important. I'm not going to discuss about these factuals, etc. I'm just going to discuss about the Monetary Policy Committee, which is very important, because you know the habit of UPSC and the KPSC examiners to ask the questions. They will normally ask the question from the concepts. Yes or no? So conceptual based questions are coming in. That is the reason I have picked up this Monetary Policy Committee for the discussion today. I'm going to discuss everything A to Z with respect to Monetary Policy Committee. I'll assure you 100% if this particular concept based question on the Monetary Policy Committee, if it is asked, you are never going to miss a single point. That is 100% surety. I'm going to cover everything A to Z. Then what are you waiting for? Let's get started the video. Dear aspirants, you know that there are two important policy decisions in any country. First one is the fiscal policy, and the second one is the monetary policy. You know already the fiscal policy is regulated by government of that particular country. In India's case, it is Government of India. That fiscal policy includes the budgeting of the country, taxation of the country, etc. So budgeting and taxation put together, we can call it as a fiscal policy. Even it includes fiscal management, public budget, public debt, and everything. And monetary policy, which means everything with respect to the money matter, which is regulated by the central bank of that particular country. In India's case, it is Reserve Bank of India. That is the RBI. Whether to increase the interest rate in the economy or to decrease the interest rate using the policy rates such as repo rate and reverse repo rate. And whether to control the money in the economy or money circulation in the economy using the instruments such as cash reserve ratio and statutory liquidity ratio. All these monetary policy related money matters are taken care by the central bank of our country, that is Reserve Bank of India. You just think, I'll simply ask you a question. All decisions with respect to how much is the repo rate in the country, reverse repo rate in the country, which means how much is the interest rate in the country, and what rate or what level the inflation should be in our country, and what rate the CRR SLR, if all these decisions in the name of RBI is taken by one single person, that was the Reserve Bank of India's governor. How it look like? It doesn't look good, no? So this is the reason in 2016, Urjit Patel, he is the Urjit Patel, who was the RBI governor, he is the ex-RBI governor, and he recommended to constitute the Monetary Policy Committee in 2016. With the responsibility of formulating and implementing all the monetary policy related issues in the country, that is to control the inflation in the economy. Therefore, the MPC was set up in the country as a statutory body. You might be knowing by seeing this particular thumbnail, it is as a constitutional body question mark. It is not a constitutional body. To call a particular organization as a constitutional body, it must be mentioned in the Constitution of India. A statutory body meaning it is an organization or a committee which is set up by the government of the country or government of India through an act. So the statutory body clause will come like that. If it is set up by the government through an act, it is called a statutory body, right? So the Monetary Policy Committee is a statutory body which was set up under the Reserve Bank of India Act 1934. This is how it becomes a statutory body in the country. Urjit Patel actually given three important recommendations. First one, he said, let us target the inflation. Target inflation in the bandwidth of 4 plus or minus 2, that is from 2 to 6%. which means he says the inflation, if it is going like 2 to 4, 4 to 6 like that, so it should not go below 2% and it should not go above 6%, and it should be maintained between 2 to 6%. This is the first recommendation done by Urjit Patel. The second recommendation is, while targeting such inflation, we have to use the CPI basket of inflation in case of WPI basket of inflation. WPI is consisting of 697 commodities, mainly of manufacturing commodities. In place of using WPI, because it is consisting of manufacturing commodities, which is not a proper indicator of the inflation in the country for the basic commodities, particularly the primary commodities like food and beverage. So that is the reason let us use the CPI inflation in place of WPI. It is not recommended the WPI, and it said CPI inflation should be used because it is consisting mainly of primary articles or the primary commodities such as food and beverages, and it also includes the services. That is why it is going to show us the accurate number of the inflation, and this need to be controlled. Meaning, if there are 260 to 280 commodities are there, mainly it is consisting of groceries and services like transportation, hotels, restaurants, etc. If you go to a hotel and have food and you pay the bill, if the price of that is increasing, and you go to a supermarket and purchase groceries, or if you go to a local provision store and purchase groceries, daily milk, egg, meat, etc. If these prices are going up, so these all commodities consisted in the CPI, not in WPI. That is the reason this inflation should not go up. Therefore, we have to control the CPI inflation. This is the second recommendation given by the Urjit Patel. And third and most important, to target the inflation and also to use the CPI as the targeting inflation. It should not be done by one single person. No, it should be done by a committee which is called Monetary Policy Committee. Therefore, the Monetary Policy Committee was set up as a statutory body under the RBI Act of 1934. The Monetary Policy Committee is actually consisting of 6 members, and 3 are appointed from Reserve Bank of India, and another 3 are actually coming from the Government of India appointed officials. So out of these 3, one is actually RBI governor, and second person is the deputy governor of the RBI, and third person is an official appointed by the RBI. And out of these 3 persons from the Government of India, all the 3 are appointed by the Government of India, that is the central government. Particularly those experts, those who are expertised in banking or finance or economy. So total 6 members are there. Out of the 6 members, it is headed by, listen carefully, this Monetary Policy Committee is headed by the RBI governor. It is headed by the RBI governor, and RBI governor is the chairman of this particular committee. Listen carefully. The Monetary Policy Committee, which is consisting of 6 members, and 3 members are appointed from RBI and 3 members from Government of India, and RBI governor is the chairman of this particular committee. And the responsibility of this committee is to maintain the price stability, which means maintaining the inflation in the economy, keeping also the growth in the mind. It should not compromise in the growth. As I told you earlier, the committee is consisting of 6 members, and the meeting will take place 4 times in a year, which means they will meet quarterly. In 1 year, they will meet 4 times. So as I told you, 3 members from RBI and another 3 members from Government of India, right? So voting will happen based on the majority. Even in today's voting, whether to increase the interest rate or to maintain the same status, it was voted by 5:1, which means 5 people supported not to change the interest rate, and 1 person said, okay, let us change the interest rate. And this decision is passed because it is having majority. Let us take an example here. In the first case, 4 people are supporting this side and 2 people are supporting this side. This decision will be passed. And in the second case, 2 people are supporting this side and 4 people are supporting this side. This decision will be passed. What happens in the third case, where 3 votes are here and 3 votes are here? See, 4 votes are here, this will be passed. 4 votes are here, this will be passed. In case of 3 votes are here, 3 votes are here, don't you think it will be a tie? In case of a tie, the RBI governor will have a casting vote. Listen carefully. I told you two important things. Even though it is the monetary policy, doesn't deal with the finance ministry. Finance ministry is not going to head the monetary policy committee. I told you already. The monetary policy committee is headed by the RBI governor. That is the reason the RBI governor is having the power to cast the vote. That is an additional vote. In case of a tie, the RBI governor cast a vote as a member in the first instance and as a chairman in the second instance. That is the casting vote. You got it? So, monetary policy committee is consisting of 6 members. I repeat, I'm just revising things. Monetary policy committee is consisting of 6 members. All the 6 members, out of the 6 members, 3 members are from RBI, 3 members are from government appointed officials. In case of a tie-in number of voting, and the RBI governor will have a casting voting because he is the chairman of the committee. With respect to the tenure of these people, so RBI, all the officials from the RBI, they will have a tenure according to the RBI Act of 1934, and the government appointed officials, they will have a tenure of 4 years. For every 4 years, they will be keep on changing. The main objective of the monetary policy committee is to target the inflation. First of all, question arises. Urjit Patel committee recommended that the inflation should be targeted to 4 plus or minus 2, which means 2 to 6%. It should not go beyond the limit. If the inflation is going to 2%, 4%, 6% like that, so who is going to decide? Who is going to decide the bandwidth? Whether it is 2% or it is 4% or it is 6% or between 4 to 6% or 2 to 4%. All these numbers are decided by the finance ministry because it is a fiscal policy decision. It is not a monetary policy decision. Let me clear here. The number 4% or 6% is decided by the finance ministry headed by the finance minister. But it is going to be implemented by the monetary policy committee by using the tools such as repo rate and the reverse repo rate. I hope you understood. Without knowing about monetary policy committee, if you simply read the news, it doesn't make any sense. I hope you know everything about monetary policy committee now. If you have any doubts, you please comment below. I'll just definitely answer or definitely reply to it. Thank you so much for watching. See you in the next video and see you. Bye bye.